All right, ready to dive into blockchain?
Let's do it.
It's been making headlines for years, but I feel like every time I think I've got a handle on it, there's a whole new layer of complexity.
Oh, absolutely. It's constantly evolving.
So, for our listeners who might be in the same boat, let's start with the basics. What exactly is blockchain?
Well, the simplest way to think about it is a digital ledger. But instead of being kept in one place, it's distributed across a network of computers.
So, like everyone in the connected network has a copy.
Exactly. Every transaction on that ledger is recorded in a block, hence the name blockchain.
Ah, I see. So, these blocks are like individual pages in a giant digital ledger.
You got it. Each block is linked to the previous one using cryptography, so it's incredibly secure and tamper-proof.
Cryptography. That sounds intense.
It is, but it's also what makes blockchain so powerful. It ensures that once a transaction is recorded, it can't be altered or deleted.
So, no more shenanigans with changing records or cooking the books.
Nope, it's all out in the open, transparent and verifiable by anyone on the network.
Okay, starting to get the picture. But most people, when they hear blockchain, they immediately think of Bitcoin.
Right, and that's understandable. Bitcoin was the first major application of blockchain technology.
But it's not just about cryptocurrency anymore, is it?
Definitely not. We have research showing that blockchain is being used for everything from tracking food supply chains to verifying election results.
Yeah, it's like blockchain is popping up everywhere these days.
Yeah,
But to really understand its potential, we need to go back to the beginning, right?
absolutely. Let's rewind.
So, where did this whole blockchain thing come from?
Believe it or not, the roots go back to the early 90s set.
Really, way before Bitcoin.
Yep. Long before, two cryptographers, Stuart Haber and W. Scott Stornetta, were working on a way to timestamp digital documents.
Timestamping, what's that all about?
Essentially, they wanted to create a system that would allow you to prove when a digital file was created or modified and ensure that no one could tamper with its records.
Ah, so like a digital notary.
Exactly. Their work laid the foundation for what we now call blockchain. They came up with this concept of a chain of blocks, each containing data and a timestamp linked together cryptographically.
So they had the basic building blocks, but it wasn't until Bitcoin came along that things really took off.
Precisely. In 2008, the mysterious Satoshi Nakamoto published the Bitcoin Whitepaper, proposing a decentralized digital currency built on blockchain technology.
Okay. And that white paper changed everything.
It was a game changer. Bitcoin's success brought blockchain into the spotlight, and suddenly everyone was trying to figure out how this technology could be used beyond cryptocurrency.
This brings us to today, when blockchain is being hailed as a revolutionary force that will transform, well, just about everything.
The hype is real, but there's also a lot of substance behind it. Blockchain is evolving rapidly, and we're only just beginning to scratch the surface of its potential.
So, before we get too far ahead of ourselves, let's take a step back and really break down how this whole chain of blocks thing actually works. I think a lot of people are still confused about the mechanics of it all.
You're right, it can be a bit mind-bending, but let's try to demystify it a bit. We've established that blockchain is a distributed ledger, a network of computers holding a copy of the same information.
Right? And that information is organized into blocks linked together chronologically.
Now, each block contains a batch of transactions.
And those transactions can be just about anything, right? Not just money changing hands.
You got it. It could be information about anything of value that needs to be tracked and verified, such as medical records, election results, or ownership of a piece of art.
Okay, that makes sense. But how does the network actually verify that these transactions are legitimate? How do we know someone's not trying to cheat the system?
That's where things get a bit more technical. There are different consensus mechanisms that blockchains use to ensure everyone agrees on the same version of the truth.
Consensus mechanisms, those sound complicated.
They can be. We can discuss the details later, but for now, consider them ways for the network to validate transactions and prevent fraud.
All right, so we've got this distributed ledger chained together with cryptography, verified by these consensus mechanisms. It sounds incredibly secure.
It is one of our most secure systems. However, it's important to remember that no system is foolproof. There are potential vulnerabilities, which we will discuss later.
Fair enough. So we've covered the history and the basics of how it works. But what does this all mean for the average person? Why should I care about blockchain?
That's the key question, isn't it? I think we're just beginning to understand the profound ways blockchain could impact our lives. Imagine a world where you can track your food from farm to table, knowing exactly where it came from and how it was produced.
Or vote in an election with absolute certainty that your vote will be counted accurately and securely.
Exactly. And it's not just about individual empowerment. Blockchain can streamline supply chains, reduce fraud in financial markets, and make governments more transparent and accountable.
Okay, now I'm starting to see the potential here, but let's be real. There are always downsides to new technology. What are some of the challenges facing blockchain?
That's a great question, and it's important to acknowledge that blockchain can't solve all issues. One of the biggest challenges is scalability.
Scalability? What do you mean by that?
Well, some blockchains, especially older ones like Bitcoin, can be slow and expensive when processing a high volume of transactions.
So like if everyone started using Bitcoin to buy their coffee, the system would grind to a halt.
Pretty much. As more people and businesses adopt blockchain, this scalability issue becomes a major bottleneck. The good news is that developers are working on solutions such as what we call layer 2 scaling, technologies that can process transactions much faster and cheaper.
Okay, so it's a work in progress, but there's a lot of potential for improvement. What other challenges should we be aware of?
Well, another big one is energy consumption. Some blockchains, like Bitcoin, use a consensus mechanism called proof of work, which requires a lot of computing power, and that translates to a lot of energy.
Yeah, I've seen those headlines about Bitcoin mining farms using as much electricity as entire countries.
It's a valid concern. However, it's important to note that not all blockchains are created equal. Ethereum, for example, is moving to a proof-of-stake system that is much more energy efficient.
So there are greener options out there.
Absolutely. And as the technology evolves, we're seeing more and more initiatives focused on sustainability in the blockchain space.
That's good to hear. Anything else we should be aware of in terms of challenges?
Another big one is regulation, or rather, the lack of consistent regulations. Globally, different countries have different rules, which creates uncertainty and can hinder widespread adoption.
It's like trying to navigate a patchwork of laws makes it hard for blockchain to really go mainstream. So we've got scalability, energy consumption, and regulatory hurdles. Those are some pretty big challenges. But it sounds like there are also some promising solutions in the works.
Exactly. The blockchain world is constantly innovating, finding new ways to address these challenges and unlock the technology's full potential.
Okay, I think we've laid a good foundation here.
Agreed. Now, let's move on to some of the really exciting stuff.
Let's talk about how blockchain is actually being used to disrupt industries and change the way we do things.
Sounds good to me.
Let's discuss some real-world applications. One that has caught my eye lately is DeFi.
Decentralized finance.
Right, DeFi. I've heard the term, but honestly, I haven't grasped the concept.
I get it. It can seem complex at first.
So break it down for me. What is DeFi in a nutshell?
Basically, it's taking all those traditional financial services, lending, borrowing, trading, you name it, and putting them on the blockchain.
Okay, so cutting out the middleman, like banks and other financial institutions.
Exactly. The idea is to give individuals more control over their money.
I like the sound of that. But how does it actually work in practice?
Well, imagine getting a loan without ever going to a bank. There would be no paperwork and no credit checks.
Now you're talking my language.
With DeFi, you can borrow and lend money directly from other individuals all through smart contracts on a blockchain.
Ah, those smart contracts again. Remind me how those work?
Sure, think of them as self-executing agreements written in code. They automatically enforce the terms of the loan without needing a third party like a bank.
So it's like a peer-to-peer lending platform, but powered by blockchain.
Exactly. And because it's all in the blockchain, everything is transparent and auditable.
So everyone can see the terms of the loan, the interest rates, all that?
That's right. No more hidden fees or fine print.
Okay, that sounds a lot more transparent than traditional lending. But what about the risk? If I'm lending my money to a stranger, how do I know I'll get it back?
That's where collateral comes in. Borrowers typically have to pledge some form of cryptocurrency, which is locked into the smart contract. If they don't repay the loan, the collateral is automatically used to cover the lender's losses.
Okay, so there are safeguards in place, but it's still not entirely risk-free, right?
No system is entirely risk-free, but with DeFi, those risks are transparent and often mitigated by collateral.
Got it. So we've talked about lending and borrowing, but what else could you do with DeFi?
Oh, tons of things. There are decentralized exchanges, or DXS, where you can trade cryptocurrencies directly with others, no centralized exchange needed, cutting out the middleman. You have more control over your assets. DEXs are generally more resistant to censorship and manipulation because they're built on the blockchain.
It's all about freedom and autonomy in the financial system.
Right. And there are also stablecoins, which are cryptocurrencies designed to maintain a stable value, usually pegged to a fiat currency like the US dollar.
Stable coins. Why would you want that? Isn't the volatility of cryptocurrency part of the appeal?
For some, sure, but stablecoins provide predictability and reduce risk, which is important for things like payments or remittances, where you don't want the value to fluctuate wildly.
Makes sense. So it's like having the best of both worlds, the security and decentralization of crypto with the stability of a traditional currency.
Exactly. And then there are more complex things like yield farming and liquidity mining, where you can earn rewards by providing liquidity to these DeFi platforms.
Okay, you're gonna have to break that down for me. Yield farming, liquidity mining.
Uh, yeah, it can sound a bit like a video game.
It kind of does.
The basic idea is that you're using your crypto to help these platforms function, and you're rewarded for doing so. For example, you might provide liquidity to a DEX, which helps facilitate trading, and in return, you earn a share of the trading fees.
Interesting. So it's a way to put your crypto to work and earn some passive income. But is DeFi just for the crypto savvy, or is there a place for the average person in all of this?
Right now, it tends to be dominated by early adopters, but as the space matures and user-friendly platforms emerge, it has the potential to reach a much wider audience.
Yeah, I could see that. More control over your finances, lower fees, and faster transactions. That's appealing to anyone, not just crypto enthusiasts.
Absolutely. But as with any new technology, there are risks and challenges.
Let's talk about those. What are some of the potential downsides of DeFi?
Well, security is a major concern because DeFi relies so heavily on smart contracts, any vulnerabilities in that code can be exploited.
So it's like a digital bank vault, but with a faulty lock?
Kind of, yeah. And because these transactions are irreversible, if your funds are stolen, there's often no way to get them back. And many times,
That's a scary thought.
it's why it's so important to use reputable platforms that have been thoroughly audited and to really understand the risks involved.
Good advice. Anything else to watch out for?
Another challenge is regulation, or rather, the lack of it. DeFi is still largely unregulated, which creates uncertainty and can make it difficult to resolve disputes.
So it's a bit like the Wild West of finance.
You could say that, but for some, that's part of the appeal. The freedom and autonomy of operating outside the traditional financial system.
I can see both sides. Freedom and innovation are exciting, but regulation provides a certain level of safety and consumer protection.
Exactly, it's a balancing act. And as DeFi continues to grow, we'll likely see more regulation, which could make it safer and more accessible.
So, where do you see DeFi going in the future? Is it just a niche market for crypto enthusiasts, or could it really disrupt traditional finance?
It's hard to say for sure, but it's definitely growing at an incredible pace. More and more people are starting to see the potential for a more transparent, efficient, and equitable financial system.
It's like the early days of the internet. We're just starting to glimpse the possibility.
Exactly. It's an exciting space to watch.
I am definitely more intrigued by DeFi now than I was before. But DeFi isn't the only area where blockchain is making waves. What other interesting applications are out there?
One area where it's already having a huge impact is supply chain management. Consider the journey a product takes from raw materials to the factory and then to the store shelf.
It's not something I usually think about, but yeah, there are a lot of steps involved.
And traditionally, supply chains have been pretty opaque and fragmented. Blockchain can help change that.
Okay, I'm listening. Tell me more. So we've talked about DeFi revolutionizing finance with blockchain, but how is this tech changing the way we get stuff?
Supply chain management, that's a fantastic example of where blockchain is making a real difference. You know how every product has that whole journey it goes through from raw.
Materials to the factory to, well, my doorstep.
Exactly. Traditionally, those supply chains have been, well, kind of a black box, difficult to track everything, which leads to all sorts of inefficiencies, even fraud sometimes.
So where does blockchain come in? How does it actually fix those problems?
Well, think of it this way. Blockchain can create a digital record of every step in that journey, and it's transparent, so anyone can see it. And because it's on the blockchain, it can't be tampered with. It's immutable.
Okay, so like I buy a coffee and I can see every step those beans took to get to my cup.
Exactly. You could trace them back to the farm, see who harvested them, how they were processed, shipped, everything.
Wow. Okay, I see the appeal, but how does that actually affect me beyond just knowing where my coffee beans came from?
Well, for one thing, it increases trust. You can be sure the products you're buying are authentic, not some knockoff.
No more fake handbags or dodgy electronics.
Right, and it's not just about luxury goods. Consider food safety. If there's a contamination issue, blockchain can track affected products instantly, much faster and more efficiently.
So potentially preventing a lot of people from getting sick. Makes sense. But what about the businesses? How does blockchain actually help them manage their supply chains?
Well, a huge benefit is efficiency. Blockchain can automate so many of those manual processes involved in supply chain management. Less paperwork, fewer errors, streamlining the whole system. And those efficiency gains translate to cost savings, which can be passed on to the consumer.
Lower prices, always a good thing. Any other perks for businesses?
Better inventory management, being able to track products in real time. It means businesses can anticipate demand, optimize stock levels, and cut down on waste.
So it's like having a crystal ball for your inventory. Sounds pretty powerful. Are there companies actually using this right now, or is this still mostly a theory?
Oh no, it's definitely being used. Walmart, for example, has been using blockchain to track its produce for a while now. It helps them identify and remove contaminated food quickly.
All right, so faster recalls, safer food. Good to know. Other examples?
Fashion industry. Big luxury brands, think Louis Vuitton and Prada, they're using blockchain to combat counterfeit goods. A customer can scan a tag and verify where that product came from in its entire history.
Wow. So blockchain is tracking everything from groceries to designer bags. Pretty impressive. Are there any limitations, though, or challenges to actually using blockchain in supply chains?
While the potential is huge, there are some hurdles. One big one is getting everyone on board. For a blockchain supply chain to work, everyone needs to be involved. Suppliers, manufacturers, and retailers need to be on the same page and share data.
That sounds like, well, a lot of moving parts. What are the challenges there?
Different companies might have different systems, different levels of, tech expertise. And there's also the trust factor. Sharing sensitive data can be a big deal for businesses.
I imagine they'd be worried about competitors getting their hands on that information.
Exactly. It's not just about the technology, it's about building trust and collaboration.
That makes sense. It's a work in progress, but the potential benefits seem massive.
Definitely. And as the technology gets better and more companies adopt it, we'll see even more innovation and benefits down the line.
Well, it's been quite a journey exploring blockchain from those early cryptography days to, well, everything we've talked about. What are your final thoughts on this whole blockchain thing?
It really does represent a fundamental shift in how we think about trust, transparency, even value. It's a technology that can transform so many aspects of our lives.
It's certainly been eye-opening for me to really dig into how it works.
The possibilities, and we've only scratched the surface. The future of blockchain is still unfolding. It's an exciting time, and I encourage everyone to keep learning, keep asking questions, and maybe even get involved in shaping where this technology goes next.